you're grappling with something that is imposing a discipline on a world without discipline, because it's like this. So the conviction is driven by this. I would venture to say the only conviction you would have to, what you should spend all your time on is, can Bitcoin stay decentralized and secure? Because if it can, or if it does, and you're weighting, your probabilistic weighting of whether it does or not, it's actually the only thing that matters in what we just described. There is nothing else that matters. And you could say, I believe governments are going to attack it, I believe quantum is going to break it, I believe, and all of those are beliefs, and you could assign a different probability. But if it stays decentralized and secure, it actually doesn't. It makes no difference. It is repricing the world.
The global financial landscape is experiencing a significant shift. Years of credit expansion, government intervention, and inflation-driven policies have created an economic framework that appears increasingly unstable. At the same time, two groundbreaking forces, artificial intelligence and Bitcoin, are redefining how value is stored, transferred, and measured. While AI drives unparalleled levels of efficiency and automation, Bitcoin is emerging as a decentralized alternative to the current monetary system, which is weighed down by debt and inflation. Entrepreneur and macroeconomic analyst Jeff Booth argues that Bitcoin is more than just a speculative asset or a digital store of value. It is actively reshaping the global economy. Unlike fiat currencies, which depend on continuous credit expansion and central bank intervention, Bitcoin operates on a fixed supply system backed by energy, making it resistant to manipulation. According to Booth, the existing financial system relies on constant monetary growth to counteract the deflationary effects of advancing technology. AI, in particular, is enhancing productivity and reducing costs across various industries. However, these natural deflationary forces are being countered by artificial stimulus, money printing, and increasing levels of debt. This creates a paradox. While technological advancements should lead to lower prices and greater prosperity, the current system demands ongoing inflation to sustain itself. This tension reflects a larger battle between a debt-based monetary system and a new digital economy driven by decentralization and deflation. Booth cautions that as this conflict intensifies, traditional financial assets could face substantial risks, while Bitcoin, as a censorship-resistant and independent monetary network, will continue to strengthen. In this video, we will explore Booth's insights on the convergence of AI, Bitcoin, and the future of financial markets. If you find this analysis valuable, please like, share, and subscribe. Your engagement helps us reach a wider audience and fuels the growth of our channel. Enjoy the video.
Ultimately, Bitcoin is repricing the world through the free market. It's the first global free market that's ever existed. Like, if you want to talk about prices falling now, or what, really what it's doing is it's lagging it's the canary in the coal mine to a deflationary spiral out of a credit system that would reset everything. And so in that event, Bitcoin would be the only thing remaining of value. And you know that, I know that, because that credit system that we live in cannot be allowed to deflate without a complete collapse, you're going to see a massive liquidity, or as that big print, or
the big
or
print.
Distribute, exactly, or anything that we want to talk about it, or Lynn Alden, the Nothing Stops This Train. All of this is the same thing, right? That the existing credit-based system requires manipulation at exponential rates to offset the productivity that should flow to us in the form of lower prices through AI and everything and everything else that we're building. I do think there is a case that some of these agents will use kind of lightning and this is a medium of exchange. But I think the bigger change, the far greater change, is all prices are falling relative to Bitcoin. So essentially the energy-backed system that can't be broken is repricing the world. And most people are pricing that energy-backed system from a piece of paper that's being manipulated. It's interesting to watch people talk about Bitcoin and everything and the existing financial system through a light switch moment rather than what's happening all of the time. We know for sure money is being debased.
Right.
We know for sure you have a decentralized, secure protocol bounded by energy that can't be changed. So both of those things are, depending on your reality, is what you're actually seeing. And so if you've been in Bitcoin for 5 years, you know what's happened over the last 5 years. If you've been in Bitcoin for 10 years, you know what's happened over the last 10 years. If you're in Bitcoin 5 years from now, you know it's going to happen. And it's going to happen at a faster rate until, like, yes, depending on what country you're in, there's going to be some massive dislocations and repricing events that could happen a lot faster. Right, that's just a failure of a currency that could. I suspect the U.S. currency is not going to fail anytime soon. So it's going, but it might print a lot more, right, and get away with it, and which would lead to a significant rise in, at least in that currency's point of view, to Bitcoin. It fascinates me watching people grapple with the one thing. Like, every day there's a new thing that they're saying this is the reason, when fundamentally nothing has changed for the last 15 years. You knew one system was insolvent. It couldn't resolve this problem. You knew the system transition was underway. If you're mostly outside the system, if you're in Bitcoin, these dips just provide opportunity to accumulate more. You're grappling with something that is imposing a discipline on a world without discipline, because it's like this. So the conviction is driven by this. I would venture to say the only conviction what you should spend all your time on is, can Bitcoin stay decentralized and secure? Because if it can, or if it does, and you're weighting, your probabilistic weighting of whether it does or not, it's actually the only thing that matters in what we just described. There is nothing else that matters. And you could say, I believe governments are going to attack it. I believe quantum is going to break it. I believe, and all of those are beliefs, and you could assign a different probability. But if it stays decentralized and secure, it actually doesn't. It makes no difference. It is repricing the world.
For many investors and analysts, Bitcoin remains a Mysterian asset that challenges conventional economic theories and long-standing assumptions about money, trust, and decentralization. Jeff Booth acknowledges this skepticism, admitting that even after extensive research, he grappled with similar doubts. The key question remains: can Bitcoin maintain its decentralized and secure nature in a world where power and wealth tend to concentrate in the hands of a few? Throughout history, every form of money from gold to paper currencies and digital assets has eventually fallen under centralized control. This pattern of consolidation often results in monopolies that shape economic policies. Given this reality, it is understandable why many question whether Bitcoin can resist the same fate. Will governments impose regulations? Can large institutions manipulate the system? Is it possible for Bitcoin to function as an independent financial network beyond the reach of centralized authorities? Booth argues that these concerns stem from a fundamental misunderstanding of Bitcoin's unique structure. Unlike traditional financial systems, which rely on trust in central institutions, Bitcoin operates on a decentralized network, secured by cryptographic principles and proof-of-work consensus. This structure makes Bitcoin resistant to external manipulation and ensures that no single entity can control its monetary policy. The very characteristics that make Bitcoin challenging to grasp are the same ones that make it revolutionary.
This is kind of why it boggles my mind that this is still so misunderstood, because it's the same thing I wrote about 6 years ago. It's exactly the same thing. You would have exponential rate of technology improvement. The natural state of the free market is deflation, so that productivity in a free market, because we only use the things that give us more value, so obviously we're going to use the things that give us more value, and they would be coming at us so fast, which the output of that had to be deflation. In a free market, prices fall to the marginal cost of production. So what's the marginal cost of production of a line of code? I used to say it all the time on your calculator app. 0, because it's a line of code.
Right.
What's the marginal cost of a line of code created by other lines of code? AI, 0. What does that look like as it moves into physical goods, as it moves into robotics, and this AI is actually tackling all the physical goods? Almost 0. Because those companies are going to compete everywhere to be able to put this, and then the cost of all those physical goods is going to follow at the same rate. And so that productivity means faster and faster productivity. And people are measuring that productivity through the system that's stealing the productivity to try to make GDP go up. So it has to concentrate, it has to centralize. So if the natural state of the free market is deflation, if prices fall to the marginal cost of production, if this is true, which we know is for sure true, if you can nod your head, you can do all the research you want on that topic. Unfortunately, what it means is you've never lived in a global free market. All of the things you're pointing at and giving strength through your actions, this leader, this person's going to fix it, they're all centralizing functions, and they have to be, because it cannot let that system, that debt-based system, that credit-based system, which we live in and price everything from, it won't let it collapse, because you won't let it collapse. So every single conspiracy theory, all of those things are inside that system, because they have to be inside that system, because you won't let it collapse. Right. And so once you understand that, you stop giving your time to, it's going to be a chaotic journey from one system to another, as people have a hard time grappling with what I just described. But you stop giving your time to the system that's stealing your time and energy.
So you're saying the more that you participate in the system, then you're reinforcing that system.
Yeah, everything within it. We know, a whole bunch of your listeners would know. Gold gets co-opted. It gets co-opted by derivatives. And if that ever got reset, then it would sink the system. So what they're really saying is, because it centralizes, it always gets repriced, and people cheat. People have always cheated on money,
right?
And so it always allows that. You can't audit how much gold China has in the reserves. If we said we were going to audit Fort Knox, I don't think it'll be a true audit. And then you can't audit what everybody else says. Whereas Bitcoin's blockchain is getting audited every 10 minutes, right? It doesn't care. So this centralized. So what we're saying with some of these assets within the system is it really, and I had to deal with this myself too. The cognitive dissonance I was dealing with is, if we've never lived in a free market and our actions inside the other system are trying to get rich in a zero-sum game where somebody has to lose because we won, every single asset we're trading within that system is really just a bet on how much somebody else is going to lose because I'm going to win, all on a centralized system, and there's no way to fix it. That's what really pushed me into exploring, is Bitcoin different first? Could it remain decentralized and secure against that power that you knew would have to try to attack it? And then where do I want to contribute my time? Because the free market isn't a zero-sum game. The free market is a cooperative game where everyone wins. If you and I make a trade, like look at what we're doing right now in this Riverside app, which costs you a fraction of what it would have cost to reach this many users. Right. 10 years ago, a fraction. And now you talk to this many users and you can build a business by yourself effectively, that by providing value to a whole bunch of people. The output of that exchange is more value for you and me, more value for everybody listening from the output of the exchange that's giving value. And so it's all around us, and that is not so the free market is the only thing we've ever found that allows us to exchange and actually in a cooperative game where everyone wins. But there's always people trying to cheat it.
Jeff Booth's perspective reveals a fundamental weakness in the current financial system: its inability to align with the natural deflationary forces driven by technological progress. For centuries, centralized authorities from governments to financial institutions have controlled money. often manipulating it to serve their own interests. As AI accelerates efficiency and reduces costs, one would expect prices to fall and prosperity to rise. Yet, our financial system suppresses this deflation through continuous credit expansion and inflationary practices. Bitcoin represents a revolutionary departure from this cycle. Unlike fiat currencies that require ongoing intervention to maintain their value, Bitcoin operates on a fixed supply governed by decentralized consensus and an immutable ledger. It cannot be devalued or altered by any central authority, offering a new paradigm for value storage and transfer. This independence forces a re-evaluation of long-held economic principles and the future of financial systems. A key question Booth raises is whether Bitcoin can resist the historical trend towards centralization. Throughout history, all forms of money, including gold, government-backed currencies, and digital assets have eventually succumbed to centralized control. Critics argue that Bitcoin may face similar pressures through regulation, corporate influence, or systemic forces. However, Bitcoin's decentralized architecture, cryptographic security, and proof-of-work mechanism provide a robust defense against these threats. Unlike traditional financial assets, which depend on trust in centralized entities, Bitcoin operates with full transparency. Its blockchain is audited approximately every 10 minutes, eliminating the possibility of hidden manipulation. In an age where financial transparency is increasingly rare, Bitcoin's resistance to censorship and external control positions it as a groundbreaking alternative. If you found this analysis thought-provoking, please like, share, and subscribe. Your support helps us spread awareness about these critical financial transformations and ensures more people understand the profound impact of Bitcoin and decentralization. Thanks for watching, and we'll see you in the next video.